What's up everyone, it's Scotty with Money Investing. Today we are going to be talking about a brand new company, a stock that I don't think I have covered on the channel yet. It is a very high quality company, so we are going to be paying attention to their earnings, which were released today, I think, or might have been yesterday. And the stock is down a little bit over 13% after the earnings came out. It is down quite a bit from its all-time highs as well. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. That 16% annual discount does expire in 4 more days, so you can take advantage of it while it's still here. Link's going to be down below. So the company that we are talking about today is going to be none other than Ulta, and that's your beauty products, retail staple stock. And Ulta Beauty, really, it's down a little bit over 13%. And this week it's down over 14%. You can see this massive red candle coming in, trading just as low as $420 per share. So 552 is the all-time high. I, in fact, very briefly mentioned this in our Discord as a potential short idea. Of course, I didn't do more research because a lot of things got in the way. I got busy and just didn't really pay attention to it. But we did talk about it briefly, that Ulta was a potential short setup considering how overbought it was starting to become, and there was this rising wedge pattern for Ulta, and of course getting up to that resistance of $551 per share. So on the daily chart, you can see it a little bit more clearly, as it was a double top resistance for that company, and then immediately had this sell-off. And of course today down over 13%, selling off even further below its moving averages after the earnings came out, and it's down 25% from its all-time highs, despite the earnings and the revenue beating expectations, and guidance was reaffirmed from the company. So we're going to take a look, because again, markets love to overreact, and we, for one thing, when we know markets prices are not always trading at their fair value. Most often they're trading at overvalued levels or undervalued levels, and in this video I'm going to break down what the intrinsic value is or could be for Ulta moving forward. So first things first, let's talk about the actual numbers for the quarter ending in April. They reported net sales or revenue of just a little bit over $2.6 billion. That's up from $2.3 billion. That, I believe, is a pretty decent growth of 18%, if I'm not mistaken here, or 13%. That's going to be that growth for the company. Comparable sales, again, 9.3% increase and 40% gross profit margins, which is pretty stagnant, pretty stable compared to last year, same time last year. And then when it comes to diluted earnings per share over here, that was at $6.88, up from $6.30. And that's going to be a growth of, let's just do some quick math here. That's going to be growth of about 9.2%, a little bit under 10%. And they opened about 4 new stores on a net basis this quarter compared to 10 last year. So cash and cash equivalents sitting at just a little bit over $636 million. Now, balance sheet is not great for Ulta Beauty. That's something that we will talk about later in the video. And merchandise inventory is ballooning for the company. So they are sitting at well over $1.75 billion of merchandise or inventory, compared to $1.57 billion at the end of the first quarter fiscal year 22. And they mentioned the increase is due to inventory to support higher demand, product cost increases, 41 new stores, and new brand launches and brand expansions as well. So they are sitting on a lot of inventory. If you exclude for inventory, the balance sheet is not good because the quick ratio is under 0.6 right now, which again I will talk about later in the video. And this right here is a share buyback program. They have been buying back shares consistently, so they have been reducing the share count by about 2.5% per year. And they've spent about $285 million, I believe, in the first quarter of 23 buying back shares, about 541,000 shares bought back. And these right here are some of the stores that they have opened in 2023 so far. Now, when it comes to the overall consistency for the company, it is great. It is phenomenal. So revenue growth pretty much went from $2.6 billion to over $10.2 billion. So that's, well over 4 times, 5 times growth here. And gross profit going from $940 million to over $4.5 billion. So that is also very strong growth of about 5x for the company here. And operating income going from about $327 million to over $1.6 billion. So very nice growth there as well. About I would say like 30 or closer to 15 times that's been increased over the last 9 years. Net income also going from $202 million to over $1.2 billion for net income for the bottom line. And you'll notice the share buyback has been pretty consistent from 64.5 million down to sitting at 51.2 million. So every single year they are buying back shares. They're allocating some money to share repurchases every single year. This right here is going to be their profitability margins, right? 43, 44% gross margins. We've got net margins at over 12%. That can certainly be improved for the company. Free cash flow margin a little bit under 10%, but their return on equity, capital, and assets is very, very good. I mean, they're looking at over 23, 28% and well over 71% in return on common equity as well. So what do we got here? We've got a company that is seen as the leader in the beauty products, which are very much almost always in demand. Not to mention consistent revenue growth, earnings growth, profitability, margins are very good, and efficiency also excellent. Now, the only potential concern here is the balance sheet. So they are sitting on a positive net debt of over $1.1 billion with a current ratio of 1.6 and a quick ratio of 0.5, right? So if you take inventory out, their balance sheet is not that great. Their quick ratio is under 0.6, which is not that great. So their quick short-term liquidity needs are definitely going to come under a lot of pressure because inventory is really what makes up majority of their assets at the moment. This right here is going to be the valuation. Now, after the sell-off, the valuation is now starting to look, I would say, somewhat reasonable. Obviously, still not cheap, but it is reasonable, trading at 19, 20 times earnings. We're trading at a price to sales of a little bit over 2 and price to cash flow at 15 to 16 times, with enterprise value to EBITDA a little bit over 13 times at the moment. So again, it's not super high, it's not super low. It is kind of like, right in the middle at around 19, 20 times earnings. And this right here is going to be that forecast for earnings per share from analysts. They're expecting 2023 or 2024 fiscal year to be around $25 to $26 per share and growing that number to over $63 by the year 2033 for the company. And this right here is going to be their own fiscal year 23 outlook, where they're expecting sales of about 11 billion to 11.1 billion. So they actually raised their guidance as well, and yet the stock price still sold off. And diluted earnings per share forecast is going to stay put at $24.70 to $25.40. So if you take into account where the price is today, so let's just do $420 divided by $25.25. They're now trading at a little bit over 16 times earnings on a forward basis, right? 16 times earnings on a forward basis is where they are after the sell-off from today. So that is certainly, definitely on the low side, right? I would consider that to be a little bit more on the low side. So if you bring our intrinsic value calculator, and the net income is expected at a little bit over 1.2, just under $1.3 billion for the company. The share count is going to be 51.2 million. That gives us an EPS of about $25.29, kind of like in the middle range of what Ulta is pretty much guiding us for fiscal year 23. And if you take into account the estimates from analysts, they are projecting the actual growth. This should be 2024, this should be 2028, and this should be 2033. So they are projecting the growth of EPS of about 13 to 10%, right? That's going to be the growth for the next 5 years, 9 years out, 13 to 10%. So even if we go with, let's say, a conservative estimate that Ulta is able to grow their net income by 10%, right? 10% I think is a reasonable estimate to make here for Ulta. And a P multiple, let's just not go with 20 or 19. Right now, it's trading at 16.6 times forward earnings multiple. Let's just go with 16, right? Just see where we end up. We'll take a look at the sensitivity grid here in just a minute. 12% discount rate, 10% margin of safety, and they have bought back shares every single year by 2.5%. So we're going to do minus 2.5% here. And the fair value for Ulta Beauty ends up at close to $377 per share. Right now it's trading at $420. So only 10% more downside needed really for the stock to be trading at a fair value if you were to believe that they can grow 10% and they can demand a 16 times P multiple. This right here is going to be that sensitivity grid. So right now, since they are trading at 420, we are closer to 18 times price earnings multiple with a 10% growth rate. And then if you do expect, let's say, a lower growth rate of 8% and maybe a 14 times P multiple, then you would end up closer to here, which is going to be about $300, $301.50. That's where you would be if you are expecting 8% growth rate and a 14 times P multiple. But for me, I think I could go with like 10% growth rate and a 14 times P multiple. I think that's something that I could also see myself going with in terms of the intrinsic value. So 330 would also be something reasonable for Ulta. Now, if you come over to the technicals, you'll notice that $335, this right here is a very, very strong support for Ulta Beauty, right? So we have kind of validated that level a couple times in the past. You'll notice that It's validated that level back in January of 22. This right here back in May of 22. And right now it looks like we're potentially headed back down to that level, but of course, very, very oversold RSI and MACD as well. So this right here, $335, $336. In fact, I'm going to go ahead and change this to 14 times P multiple. So my fair value is going to be at $330.54. That's really where I would be, and plus minus 5% with that flexibility range is going to put me somewhere between 314 and 347 for Ulta Beauty. And it's going to be in line with that support right here at $335. So this right here is really what I'm watching for this company. A couple of things that I want to mention is the inventory levels and of course the balance sheet, which is those are two big concerns for me personally. But those things kept aside, consistent revenue growth, very solid margins, consistent earnings growth, valuations coming down to somewhat reasonable levels. So 330, 335 is what I would be looking at for Ulta. Let me know your thoughts down in the comment section below. It is a more of a value / staple stock, so it's not like a growth company that you'd expect to kind of increase earnings by 20-30%. So it is a little bit more of a value / staple stock because it does belong to retail. So let me know your thoughts down in the comment section below. What do you think about Ulta Beauty? Are you buying, selling, holding? What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel, join our Discord with the link down below. There's a 16% discount there. As always, happy investing. I'll see you all in the next video.